He is the Chief Commercial Officer at Transnet Freight Rail, heading the state-owned rail company through transformative period. Gavin Kelly, Chief Executive Officer at Road Freight Association, who represents the trucking industry's critical role in logistics. James Holly, Chief Executive Officer of Traction, one of South Africa's foremost private rail operators, and Kenneth Williams, Executive Site Operations at Mccloskey Group, who are experts in private siding solutions and logistics. Let's give a round of applause for them. Should we switch? Our technical directors are asking that we actually switch it on in Perfect. I think we'll start with exploring some current challenges and opportunities, and if time permits, we'll do a Q&A and allow for our audience to partake, as this is a very critical component of this transformation. Panel, welcome. And we'll start with you, Mccloskey. Transnet's introduction of the third-party access. Let's give a round of applause for that. It's certainly such a good initiative to get South Africa's export out there. Just briefly explain to us the reforms that are happening at Transnet with allowing private operators into the network, and just encapsulate what the rail network statement is.
Thank you, General, and good morning to all the delegates in this conference. By the way, a big round of applause to yourselves and the team for putting together all these critical stakeholders in this very important conversation. In terms of reform, we'll appreciate that South Africa sits with one of the biggest rail networks in the world. We are looking at 33,000 track kilometers of network and 21,000 route network kilometers of rail network. In this vast network, it requires a significant investment in enabling continued operations across the networks, something that Transnet as an organization on its own cannot obviously execute across the board. What that results in is some of the network capacity that we have on rail becomes unusable, and therefore limits the economy of the country from actually gaining access and of course then growing in terms of using rail. So what rail reform seeks to do is to bring in private sector to enable investment into the network, but also to enable an increased movement of goods across the network to therefore power the economy. Just in a brief summary, the network statement seeks to then put forward a structured process that is led by our recently incorporated operating division in Transnet. If you ask me about Transnet changes, that is the biggest and the most significant change. We operated previously with 6 operating divisions. We've added a 7th one now, which is the Transnet Rail Infrastructure Manager. It is a regulated entity that seeks to enable the private sector participation in utilizing network, but also to raise funding for upgrading and maintaining the network at the 33,000 kilometers that I've spoken to. So in a nutshell, the network statement that has recently been published provides a structured process that private sector and rail operating companies can follow to then apply and gain access into the network and therefore enable movement of the economy globally.
Thank you. Let's put it in the context of our steel industry. Once fully implemented, by how much could we see improvement of exports, especially within the manganese, iron ore, and chrome industries?
Thank you. We are forecasting a significant jump in these commodities. obviously this will take time to gradual. If you look at the manganese, for example, we as Transnet are servicing 16 million tons, which is what we've got locked in contracted, but the demand sits somewhere in the 28 million tons at steady state. So you can tell that we are looking at about 12 more million tons that could be moved, and that is available to then enable growth in the private sector. 28 million tons, of course, not today. In today's terms, we're looking at about 2034, 2035 at a steady state. If you look at chrome, for example, it's a similar story line. What we are servicing and the demand that is out there is by far in excess of the capacity that we have available. If you look at your iron ore, it's the same story line. In iron ore particularly, we are contracted for about 60 million tons. The demand, if you look at the emerging miners that are coming up, sits somewhere in the 80s. There's another 20 million tons. Of course, that is within reason. We do note that there are projects that ultimately, in the long run, do not have a long life of mines, and we are therefore cautious in terms of those numbers. But at the end of the day, what is very clear is that there is a real addressable market generally now, not just these commodities, of north of 250 million tons in the country. We as Transnet at this stage are targeting to move on rail about 180 million tons. And the gap there requires that there is a partner in the private sector that comes in to support the movement of the economy.
So there is demand.
Most certainly there is demand, and the demand is by far in excess of what we are able to do in terms of our capacity.
Now let's move on to our private operator, James. You're the CEO of Traction. You are at the forefront of private operators. What can the industry expect from new entrants like yourselves, and looking forward to enter into the new network system?
Thanks, and good morning to everybody. I think that what South Africa has, which is, I guess, it sounds kind of obvious, but is the most important thing is that, as Mccloskey says, we've got volumes, and we've got significant volume demand, and that's where you always got to start in our world, The whole Zambian DRC copper belt, it's all those, the road trucks that anybody that drives on our South African, so the road trains that anybody that drives on the South African roads will see coming down the N1 and N3, bringing copper. That whole market is a sort of circa 8 million ton market, and that's copper out, that's mining reagents in, it's project cargoes, general freight, like plus minus 8 million ton market. ArcelorMittal is a 10 million ton customer. We've got a 250 million ton freight demand in South Africa. The volumes in South Africa are so much bigger than what we've got elsewhere in the continent. And we're at the moment a South African company that operates in 9 countries, well, 8 countries outside of South Africa. And that's how we've developed our business in the past, because of the historically we haven't had the ability to run in South Africa. What we now need to see in South Africa is, in terms of the network statement, is how do we see the network statement turn into investment? Because if we don't see investment, it's really, rail reform is unfortunately completely meaningless. And that's because nobody's invested in trains in advance of the network statement being released. Okay, and trains are unfortunately expensive things. So I'll sort of back in the cigarette box estimate is that South Africa needs about 100 billion rand of trains, okay, to service the 250 million ton capacity or demand. To unlock that, you need to have a very fertile basis of investment, okay? And I think if we look at the network statement as was released in December, some of the issues on previous engagements and versions have been addressed. The tenor of the access right has been addressed. To invest into a train, it's an asset of the like circa 30-year life. You have to have a long tenor of access right, because you need to secure long dated debt. That's been addressed. The tariffs, we had concerns regarding the tariffs. there was a single tariff across the whole network originally proposed by the Transit Infrastructure Manager. That's been addressed. We've now got a multi-tiered tariff that's very good. The tariff we thought was too high, that's been addressed, it's been reduced by approximately 50% and more for some bulk commodities. That's also good. The next element that I think we need to address, though, to see investment actually doing a lot, is that there have been 5 weekly slots released across the network, which is somewhat dependent on who you talk to. There are about 670 slots across the South African network in its current form. We have to remember that the current form was also, as Mccloskey says, it has been affected by underinvestment and maintenance. There should be a lot more. But about 670 slots. So 5 is not many, less than a percent, okay, of the network's been opened up. It's been opened up as weekly slots, okay, which also doesn't enable the private sector to optimize the utilization of trains. Trains don't run sort of neatly according to a weekly schedule, okay. So what happens is if your train completes its cycle in 4 days, the train will have to wait for 3 days for its slot to open up again, which is very suboptimal, of course, in terms of trying to sweat your assets. And then the transit times that have been put forward are slow. So let's say on a Palabot or Tutu flow, for example, and these are not the right numbers, but let's say the cycle is supposed to be completed in 72 hours, the cycle is being put forward as 140 hours. Okay? And the delay between design and actual transit time is between 122%, I think, and 20%, 27%, if memory serves me right, across those 5 slots that were released. Okay? So if we're going to see this gap filled, okay, and if we're going to see the investment rolling out, we're going to have to see a lot more capacity being opened across the network, okay, not just 5 slots. We're going to have to see the ability to optimize the utilization of trains. We're going to have to see the transit times coming back to something that enables the efficient utilization of trains. And then in the actual rail access agreement, which is a critical funding document, we're going to have to see a much stronger commitment in terms of service level commitment from the Transit Infrastructure Manager or the TRIM. Because if you don't have a service level commitment, at the moment, for example, there's only one-way penalty. The private sector pays penalties, but the TRIM pays none. Just as an example, but it actually provides multiple elements of the agreement. We're going to have to see that addressed too. So I think progress has been made, no doubt. Exceptional, we've got a regulator, amazing. The design of the policy is brilliant, but we're not there yet.
I think I'll just touch on some of the things that private sector can do to ready themselves to enter this market, but we'll circle back to that a bit later on. I just want to go to Kenneth of Magoya. Kenneth, Magoya plays a key role in handling a significant amount of chrome on a monthly basis. What are some of the challenges that producers, especially the younger, junior producers rather, face in securing access to the main rail slots? What are you seeing on the chrome front?
Hi. Thanks to you, and again, well done to Mccloskey and go through this conference. Just a small intro into where I think we're quite well known to be in this industry, specifically around our high-powered rail facility and terminal in Vietnam. Before I really give us the problems, I just want to give us a quick win story. A quick win that took some innovation. We all know that the rail network has challenges, specifically on the North Corridor with the rampant cable theft and vandalism, which is actually a disease in this country. That volume would have been lost, and it requires companies like Magoya to come in and assist with the logistics. For the better part of 18 months, we've moved over 1 million tons of volume that would have been lost from the chrome and ferrochrome industry. So it requires that collaboration, and I think it's important that we allow companies to help juniors specifically in that sense. I think in terms of the challenges faced from the junior miners' perspective around the chrome industry and the oil industry, one of it is the access to rail slots. Okay, we know that there's open rail slots for very limited rail slots for juniors within South Africa, but getting access to that rail slots is problematic. Okay, for example, you have junior miners in some quattro schemes, for example, that are allocated 125,000 tons per annum. Specifically in an open cast scenario, that junior miner in particular can process that in 8 weeks. So what does he do with the rest of the year? So we really need that to be looked at in terms of the junior miners. One of the key issues is the limited rail capacity. Obviously, we know due to the historical underperformance in the rail network. You know, last night I sat and I thought of an analogy. Once a year, all politicians come to Cape Town to discuss the state of the nation. And here we are, once a year again, the whole mining industry comes to Cape Town to talk about the state of the network. So it's important that we open and we dissect the network, as Jamie mentioned, but the limited rail capacity and the actual allocation to the juniors is fundamentally important, because you have well-established routes to market for your making. It's like any business. When you're trying to cut into a new business as a new entrant, it's extremely difficult, you know. And trust the Transnet and government to an extent will allow more rail access and allocated capacity for the juniors in any particular mining sector. In terms of the allocation for the rail capacity, it's also important to understand that if we take, for example, the coal sector, Steel and Ferroalloys conference, but the coal boom that happened 2 years ago, if we had enabled a few more juniors during that time, it would have had much more impact in terms of the livelihoods and the economy of those workers that work in these junior mining facilities. Yeah, and I think that's about it in terms of the challenges. We will talk about more.
Yeah, and certainly those will be addressed through
Yeah.
this new reform. Gavin, the trucking industry has carried so much of the load while Transnet has had challenges, and you've advocated for more rail capacity given the influx of trucks on the roads, which is another challenge. Your thoughts on the rail network statement?
Thanks for that question. So first of all, what he said, I think we've said the same sort of thing once the statement came out, and we raised a number of concerns. One thing that a lot of people think is that, you know, trucks or the Road Freight Association is going to keep every single gram or kilogram of potential freight on a truck and on the roads. We all know that that is not a sustainable solution for our roads, if nothing else. And of course, the cost of moving cargo by road, you can go into a long debate around, is more expensive than rail. If you don't have rail that is actually efficient and operating, then it becomes a bit of a technical, theoretical discussion. But we are selling the ferroalloys and the coals and the whatevers to the rest of the world, so we need to make sure that our cost of logistics is as low as possible. Because the reality is, once we start to mess that up, we lose those markets. So from the very beginning, the Road Freight Association has said there are some cargoes that should be on rail for a number of reasons, and one of them is if you've got a huge amount of a type of cargo. So we've heard about the types of volumes that are out there that need to go to wherever, whether it's regional, local, whether it's out into the rest of the world. You need to build a logistics chain or a mode of transport that is best suited to moving that as fast as possible, as efficiently as possible, cost effectively as possible, with the least amount of damage to what seems to be innocent players along the line, excuse the pun. So let's see what's happening with trucks. The rail line down to Richards Bay can't move the amounts that is required for various reasons. We won't discuss that. So what's the option? Okay, we're going to go to trucks. And we see what that does along those routes, because the routes were not built for that sort of place. Don't worry about overloading, and I think I said that last time. Yeah, just the sheer volume of what we're trying to move. And I think James was saying, you know, there's 180 million tons of this needs to go there, and 100 million tons of that needs to go there. So we just cannot, physically, our roads You cannot continue to carry that sort of load unless we change them. And this is one of the important facts. Now we sit and we're faced with a couple of options, and everyone here supports e-tolls, don't they? Or tolls, or more taxes. Because that's the reality. If we're going to keep moving this sort of thing on the roads, in this case in Mpumalanga province, we're going to have to start upgrading major roads. And those roads were built through nobody's fault in the 60s and 70s, not built for the types of vehicles that move today, or the amount of vehicles that are required to meet the customer demands. Because remember, ladies and gents, this isn't about whether it's a train or a truck. That discussion is not important. What important is how we get that commodity that a customer is paying for to that customer as efficiently as possible. So we need, definitely, to move to rail. And a lot of comment we've made has been around, not because we want to stop it, we've actually said, we need to get this to work. In the last 2 months, the association has been saying to its own members, because you get this other question I always get asked, well, isn't road going to disappear?
Yeah.
Good luck, we've got enough dynamite to blow up the road. No, is road not going to disappear? What's going to happen? There are some realities.
Sure.
One of the realities is, even if we had all the money and all the ability to take the land we need to take, so on different note, expropriation of land is not a bad thing, because in some cases you need to do it. We're not talking about taking somebody's land in nature. If we had all of that in place, we still couldn't build enough rail to get to where they need to go. So some roles of road will change. I currently see a 600, 700, 800 kilometer run of a truck. That's why we built, in those days it was called the Richards Bay Coal Line. So we didn't run 600 kilometers of truck from the mines to the port. So that might become rail, but you're not going to be able to, if you think of a spider's nest, for want of a better word, have all these little rail spurs going everywhere. It's going to be impossible to do that. So there will always be a role for truck. And we've got to come to what we've been saying. There needs to be a symbiosis between the various, and the fancy word is modes, call it road and rail. So that's the first thing. The second thing is, we can't go, and once again, with due respect to people in the ports, but we can't go into a scenario where we suddenly have some sort of high court process, where somebody gets upset because somebody else got something. We've got to make sure that the process of getting onto the rail is solid, that it's open, that we are able to make this, because we want to make it work. This is not about kicking Transnet up the rear end. Because if that's our approach, then we've lost it. This is about, they need to do work, granted, but we need to make sure that the guys like James, etc., can get onto the railroads and move. And that's the important thing, I think, is driving. Many of our members aren't only road freight operators, they are logistics companies. And I can tell you, many of them, when a customer comes and says, I want you to move A, B, C, they look at everything, rail included.
So they are able to venture out into rail?
Well, they try. They try. The thing to do is, I can tell you about the cement industry and other heartaches. There's a thing called rail runner, etc., etc. There are so many solutions out there we could use. It's making sure the slots, the access, those guarantees, and then getting, we saw in the last 48 hours, let's talk about 61 billion rand going to transit. I can tell you right now, no one's going to get transit a plug nickel unless certain things are very clearly defined. Because we've got too much of a history of, we give money, and 2 days later they say, we need it. Where did it go? What are the priorities?
Yeah, I think what I gather from what you're saying is that trucking will still play a critical role. Yes, there might still be some smaller changes in terms of distance, but a truck still needs to collect the cargo from the mine to the siding. So trucking will still play a critical role. Okay, so let's get into the technicalities of this reform at Transnet. Where are we with the allocation process? Are we still on track with the timelines of April, May towards the announcement of who the new players will be?
But thanks, Daniel. So before I respond to that, just to applaud the two gentlemen, the three gentlemen rather. I think the input that they've shared here is quite important, starting with Kevin. There always will be room for all rail and road. How we perceive it from the logistics perspective is road provides two very critical things. The first one is the first and last mile. The second one is flexibility when markets do what markets will do. There's no scenario where you only relate in the logistics space. There's always, the two will always complement each other. And the point that the gentleman made around some of the concerns in the network statement are quite valid. It's something that we've also noted. Some of the concerns have been brought across officially and through IREC and our shareholder Department of Transport. They have been looked at. One of those is, to James' point, the volume and the number of slots that we've made available. It is a valid point that you cannot sustain assets that can only operate for 70% of the time and the other 30% they're idle, because capital then becomes not fully utilized. So those are well noted, and in terms of where we are with the process, very critical to note that there is a deadline of the 7th of February for all applications to come in. We are sticking to that. We have also received a request for an extension in terms of that. Those are also being considered. I'm glad the gentlemen are acknowledging the fact that all the concerns that have been brought forward are being addressed. I mean, if you look at our initial intent of the network statement to where we are today, it really truly is a reflective view of the approach that we've taken to consult and take inputs and apply the inputs. So with that in mind, there is a process to review the network statement, and there will be a revision on the network statement which will be released in the 2025-26 financial year and early in the year. But at this stage, the application process that's currently open remains open until the 7th of February. And to the point around funding, which comes out, and I fully agree with Gavin in that no one is got deep enough pockets to throw around 65 billion rands without full accountability, but also without understanding where it's going. We've taken a four-pronged approach to say how do we fund this infrastructure growth. Remember I said we sit with an infrastructure that can support us 250 million tons, but at this stage we are only executing 180. The four-pronged approach to funding is number one, of course, through access fees, which James has touched on. We've reviewed in terms of approach. Initially, it was a one blanket fee across the network. We've now brought about a network-based access fee. The second funding model that we are looking at is PSPs, bringing in private sector for specific projects in specific lines. And of course, the governance processes around that and the accountability that comes with that is such that whatever is raised is spent on the network. The third and the most unfavorable is debt funding. It still remains an option that we're exploring. Of course, given the gearing ratio that we are sitting with as an organization, it's not the most preferred. And of course, the fourth one is we've constantly been engaging government to say whatever is available in terms of enabling the network, which is the backbone of the economy, needs to be brought about. So yeah, I think we are fairly aligned and we are on track to roll out the third-party access, hopefully as early as possible in the next financial year. We start seeing a rail operator coming in.
When we talk about funding, in fact, I think in a week or two, the finance minister will be also delivering his budget speech, which also includes an allocation to Transnet. What are we expecting there?
Sure, your guess is as good as ours. We've shared what we want. We've been clear around what our needs are. We need 65 billion rands to make the network sustainable. As to what comes out of that, we are trying to book front row seats at this stage. We haven't come right, but hopefully it will be good news.
Let's talk about the costing structure. Yesterday we had about 2 manganese producers talk about how the cost of trucking is similar to the cost of railing on the manganese line. How do we make the third-party access, rail access, attractive to manganese producers, since at the moment the cost is the same of trucking and railing? So how are we going to work around that?
It's a very good question. So, first of all, the tariff that they are raising concerns around is one that incorporates access and operating costs for now 2 entities, TRIM, infrastructure manager, and TFR, the rail operating company. So the sensitivities around the price now comes about precisely in comparison to rail, because road prices are quite flexible depending on demand. When demand is high, road prices will obviously escalate, but when demand is low, road prices will come down. If you compare at, I'll say, the right time, when demand on the road is low, you'll find that the two are comparable. But when you compare a different time, when demand for road is extremely high, you'll find a significant gap between the two. So at this stage, I would say it was a perfect storm. In the recent past, it's been a perfect storm in that the market prices for manganese have not been the healthiest. You know this better, everyone in this room will know this much better than I do. Stock levels in China have been at a point where it has impacted price. At the same time, demand for road has not been as healthy as it was when coal was in a boom. And therefore you've got an influx of road motor vehicles that are available, and therefore it pushes down the road price. So comparing it to where it is today, you will come up with that conclusion. On the flip side of it, rate pricing, our pricing strategies and methodologies are such that before trim and after trim, there is network that needs to be maintained. There is rolling stock that needs to be refurbished and maintained. And that has to then be underpinned by a pricing that enables then continued operation for the entity. So you find the manganese prices have been very stable, escalating annually on the basis of a basket of indices that is reflective of our cost structure. And over time, it sits where it is today, as opposed to road prices that, of course, fluctuate, but also, increase on the basis of the cost elements that drive that. So yeah, it depends on when you compare it.
The timing.
Yeah.
There is no way where we can talk about rail without talking about ports. The value chain is all connected, and if we are going to add capacity to the rail somehow at port, things have to be ready for that extra influx. How is Transnet planning to beef up the port situation, increase volumes that are going to be coming in without congestions? We've had congestions at PE when the manganese market was running. We've had congestions on the coal side. How do we make sure that while we put on extra rail capacity, we don't create problems at the port?
It's again another very good question. I think maybe before I respond to that, it helps to provide a bit of context and history. As South Africans, we've done something quite remarkable that I think needs to be recognized at some stage. we were able to ramp up manganese export capacity from 5 million tons to 16 million tons with very minimal investment from the rail and port perspective. 5 to 16 million tons in a space of, I'll say, 6-7 years with minimal investment. How we did that is we've constantly identified bottlenecks in the system, and where the bottlenecks are identified, we then find a walk-around solution to enable then continued rail volumes. We started off with manganese moving via the manganese terminal in PE, which is over 50 years old today, and which has by far surpassed its useful life in the books. And of course, through that limitation, we then partnered with private sector to enable back of ports. In that process, we then found that we were now fully subscribed. We switched over to Saldanha, where we were moving iron ore, and we identified that there's additional rail stock capacities. We plugged in manganese there, ramped it up again back of ports in Saldanha. In summary, there isn't a port other than Mossel Bay in South Africa that has not touched manganese. We've always looked at where there is capacity and we've plugged in manganese in that capacity. What we have not done is we have not implemented a significant capital project in enabling that growth. It has always been looking at gaps and plugging in the gaps, which has resulted in the congestion that you are referring to. Moving forward, in the era of reform, all capital projects that are on rail integrate with a port project. Look at Mocha and Kabeja at this stage. There is a 21 million ton manganese project between Kabeja and Saldanha. It touches on both rail and port as an integrated function. And that's our approach really across the business. There is no point in aggressively ramping up rail and then not having an outlet for those rail volumes to be evacuated.
Final question before we open our other panelists. Safety and security. Those remain major concerns. And I think they are the root cause of some of the challenges that become hurdles to cargo not reaching port on time, especially cable theft and vandalism. How does Transnet plan to address that?
First of all, we've got processes and projects at play, and we are seeing results of those initiatives that we've implemented. I think when I was here last year, I announced that we were implementing an outcomes-based contracting process with our service providers. We've done so, and we are seeing results in corridors where it was successfully implemented. The only corridor where we have not rolled it out, we actually did, but there were some issues with the service provider, and we pulled that back, was on the North Corridor, Coal Line. All the other corridors, we've gone ahead and implemented an outcomes-based security contracting, and it has come in and it has started to yield results. Maybe something that will provide a bit of context again. According to our trajectory in terms of our performance, in today's terms, we're supposed to be executing below 140 million tons, somewhere in 135 million tons per annum. Yet we are surpassing that quite aggressively. And a portion of that contributor to that is the outcomes of the restructured security approach. Secondly, we've got our customers that have come in as well to support private sector, which we are recognizing, that has come in to sort of partner with us in fighting this fight. We've also entered into an MOU with SEPS, and they've come in quite heavily as well to support. There are conversations through our shareholders that extend all the way to the Department of Defense, for SANDF to come in and play a role as well in safeguarding our network. The reality of it is, it is a problem that impacts Transnet, but it's not a Transnet-only problem. And I really look forward to the time where we have third-party operators on the line as well, so that we can pull our heads together and find alternates that Transnet may not have explored to deal with this. So James, really looking forward to seeing your head become even more grayer than it is now.
Yeah. Just out of curiosity, any project, especially this big undertaking in the very beginning stages, will have teething problems. Who's responsible to deal with any disagreements between private rail operators or amongst themselves, or private rail operators with Transnet? Who's responsible in sort of calming things down between the two? Is it true? Is it Transnet? Who's the overseer in that front?
So in its inception, through the national rail policy, the establishment of reform in its core anticipated precisely that there will be issues. And for that reason, the entity TRIM was placed under a regulatory function. At this stage, that role is being played by an interim rail economic regulatory capacity, but over time there will be a permanent rail regulator that will be appointed. They will play a referee, otherwise Transnet might bully everyone else, which we don't do, by the way.
Now let's get into the readiness and the intricacies of the private rail operators. James, beyond capacity, you've explained that you are there, you're ready, but beyond capacity that our operators already have, what technical or operational challenges does the private sector still need to address fully to fully take advantage of this opportunity? What are the things that still need to be looked at for you or other private rail operators to take advantage of this opportunity?
You know, it's interesting. One of the things that I get often is that we as Traction not very worried that there's going to be a multitude of competitors that enter into the market because of the opening up of the South African rail system, okay, and the rail industry volume opportunity. And it's actually, it's not. I'm not worried about competition at all. I am worried about competition, but not in the sense that you would think. I'm worried that there's not going to be enough competition in the South African rail system. I'm mostly worried about that because railways succeed on density, okay, and that's because we've got very high fixed cost businesses. The railways, very, very high fixed cost businesses, and a huge degree of the costs associated with running a railway exists whether you move 1 ton or you move 40 million tons, okay? And that's, what Mccloskey said in the beginning, which is 100% right. We've got this enormous network in South Africa, which is, I think, unsustainable. There was, in the Freight Logistics Roadmap, which Parliament approved, there's the rationalisation of our network down to about 12,000 kilometres, down from the circa 21,000 route kilometres now, which really, really must happen, okay? I fully support that. But why are they saying that must happen? And it's because we don't have the density on the networks to be able to sustain a broader network. Okay, so lines like the coal line, iron ore line, and the manganese line have got high density lines. They make a huge amount of financial sense. But those lines together make up, probably depending on what your definition of the network, around about 20% of the total South African rail network. So then you've still got 80% of the network that's low volume and theoretically unsustainable. Okay. And that's really the challenge that we have as a rail industry in South Africa, the broader industry, is how do we get density onto those networks? The container corridor, what used to be the NACO line, was designed for 72 slots in each direction each day, 144 slots a day, in both directions, 1,008 slots a week. Okay, that's the 5 slots at least into context. But and now it's much less because of the maintenance into that line hasn't been what it was. That line used to move 30 million tons. 30 million tons. It's now moving 15% of that. Okay. How do we get that volume back? How do we get the volume? How do we get the density back? Okay, onto the network. And what are the issues that are going to prevent the private sector from coming in? And the biggest one is money. Okay, it's your ability to raise funding, and that's why the market friendliness of this network statement is absolutely paramount. It's very hard to raise billions of rands into new train capacity. Very, very, very hard. Okay? And so that document needs to be very friendly, much friendlier than it is now, really, in terms of your ability to raise funding. The second issue that you have is that there is a very strong rail safety regulation in South Africa. Okay, in our business we have, we're 37 years old, of course, we have about 16,000 control documents that we use to run our business in a day. Okay, so a new entrant into the market has to come and they have to start writing their control documents. Okay, as to how their standard operating procedures, how they run the business, and how they meet the regulation, okay, the safety regulation. Then we're in a very specific skills environment, okay, especially locomotive and maintenance technical skills, very rare, highly skilled individuals. To give you a sense, we've got a rail training centre. We take semi-skilled artisans, we put them through a 3-year dedicated training course. We put 750,000 rand into each person in terms of how much we spend in getting them through the 3 years. Then we put them into our manual workshop complex in Roslyn for another 7 years. And after 10 years of exposure, we put them in the field. Okay? That's how long it takes to get your skills to the level. So now you've got barriers to entry, which include money, which include regulation, which include skills. And it worries me. It worries me that we won't have enough competition into the South African rail sector to close the gap, to create the density, to create sustainability.
Gavin, the trucking industry often faces challenges like theft. We've heard a lot of stories where cargoes being exchanged for different or lower grade cargoes and so on. How is that currently doing? Could an improved rail network alleviate some of that?
I don't think an improved rail network is going to make that disappear. That's something that we live with on a daily basis. And there are different types. There's some very structured, very organized. I don't know if some people sitting here remember the comments I made last year, and I asked questions like, what was the number one removed cargo off the back of trucks, commodity, and everyone thought, well, diamonds, or cell phones, or fuel. And they were quite shocked to find out it was mineral. Because it's market related. Exactly the same way why you have people putting goods on trucks, because the customer gets what they want. And Transnet has a symptom which is not, they have not caused it. The theft of overhead wiring and railway lines, and horrendous stories of a train derailing, going down a railway line, the next minute the rails aren't there, and they're now becoming a truck. Moving everything to rail isn't going to remove the fact that theft happens and that criminality happens. You could have a number of scenarios playing out. One of them is that these syndicates, and that's what they've become. That they are as organized, they have as good a funding as many of our security agencies have. And if they've decided to take a cargo, and 2 weeks ago there was another story about coal theft in Mpumalanga, okay, from trucks, but still, if there is a market for what you want to take off somebody without paying for it, they will make a plan. So, by sheer volume of commodity moving to rail, you would have a stupid statistic of less crime on trucks, but that's because the commodity is moving by rail. So the question is always going to be, how are we going to secure our railway lines? And you heard it on the course of saying, the worst thing, let's have a utopian example. We get 61 billion today. And tomorrow we go and put all the lines back, all the signalling back, all done, lacquer, we can start moving rail trains up and down the country tomorrow from 9 o'clock in the morning. I'm being facetious, but bear with me. It doesn't help if by 12 o'clock that day somebody's come and relieved us of the cabling and the signalling and whatever. So we are going to have to protect our assets far more than what we're doing. Just by moving it to rail doesn't necessarily mean it will go away from trucks. What's happening in the road freight sector is that where maybe 10 years ago it was hijacking of trucks on the road, and I think I said it last year, these criminals have now going to the depots. They say, well, why must we wait for the trucks to come past? Let's go to where it's all stored. And they're good enough to actually change the branding on some of these trucks. So they use those trucks camouflaged as something else and move out. So it will always be a challenge. And part of funding, part of the discussion around funding is going to be the private sector saying, you know, I'm going to put money in there. There's plenty of money to be put in there. Ladies and gents, there's plenty of money to be put in there. It's the mitigation of the risks that lie there. And James raised it. I'm also concerned that we're going to get one or two, and I'm not putting for you, James, we're going to get one or two or three guys that are going to come along and say, I'll play in this space. We need a real concerted effort, and the concerted effort isn't just about getting slots. It's about how we're going to protect this because we're talking big money.
That's right. As more operators come in, Kenneth, sidings will be more important. And any plans to extend your sidings as the rail influx improves?
Yes, no, definitely. I think it's improving that, you know, again, we totally with Kevin and Toby. In terms of the road, the collaboration between road and rail has seen a steadily increase in transnet volumes because those road trucks brought the cargo from X mine to a particular siding anywhere in the country, and that's where you need that flexibility. Yeah, we definitely have plans to increase the siding footprint as it's needed, you know, but also in terms of the innovation and the upgrade of the sidings, these new technologies out there, and it's important to upgrade a facility to also bear juniors in mind. So, for example, you get a transnet allocation in the rail network, which comprises of majors and juniors, new entrants, okay? The same should apply to the sidings. All sidings shouldn't be given to majors. There should be a 20 or 30% allocation that's allowed for the juniors. That gives them then direct access through Transnet and through the network. And I think with the introduction of the third-party operators, the likes of Jamie and the team, it's just going to open up the door even more for juniors to come in. And, you know, where there wasn't capacity, there wasn't any availability of slots for juniors, this would allow them, and obviously the introduction of new sidings, which will benefit the industry tremendously.
Let's shift gears a little bit towards regional dynamics. We know that Mozambique plays an important role as a channel for South Africa's exports, and we've seen multiple disruptions there due to post-election protests at the Limpopo border, which is a very critical exit point for our members, Call and Pro. What was the impact, Kenneth, of this? I know things have died down now, things are peaceful, but what was the impact of this? And surely, if we are able to, in South Africa, fix our rail system, we should be able to, you know, use our ports instead of relying on our neighbors, which have very much done a good job in helping South Africa exit these minerals. What's the situation in Maputo?
Yeah, thanks, Stingy. I think, you know, the industry at large was quite concerned with the civil unrest that occurred in Mozambique late last year, and there was days we started off sporadic days where, you know, we had some unrest and things were still normal. Then it started to become more serious. Specifically, let's talk about before we get to the road freight, the rail factor. Your Sino-Garcia border post, your exchange between South Africa and Mozambique was specifically targeted during this time. Barricades were put across rail lines, not allowing trains to enter into Mozambique. We had one instance where a train almost collided, a magnetite train almost collided into a barricade. luckily it didn't derail. And it caused an immediate stop to their artery to a port. It was obviously affecting most of the chrome and ferrochrome industry guys that move product through their channel. And when it comes to the road factor, there was days where CFM would open up the rails again and communicate to the industry to say, guys, we can bring our trains through again. And then later on that evening at 1800, they would close the rail line again. From the road perspective, one of my customers turned around 480 trucks from the border back to the sidings, And I think that's up to Transnet. At that point, that's what we talk about in this industry, about being agile. And the agility that Transnet had shown on that corridor was then to move the North Corridor sets over and the Maputo entry sets over to then run down to Richards Bay during December, and we had phenomenal volumes that moved down. They created that flexibility. So in essence, a vessel's port of call that was for Maputo, destined for Maputo, just then changed, coming into dock into Richards Bay, and we still got the volumes up. Anyway, it also impacted not only the South African context, but our neighboring states as well. If you look at the Swatini rails, and their rail network into Mozambique to Goba, it severely impacted the coal flow in there, and it also impacted something that's very crucial, is the sugarcane exports that run into Maputo. So it had far-reaching implications. There was a humanitarian crisis at the border posts with the truck drivers that were stuck on the border with no food for days. They had to turn around and come back to the loading point. But I think over the past 3 weeks since the inauguration, things have steadily died down, and we now see as industry an enormous pickup in the space of rail and trucks going back into Maputo, so things have normalized there. It's good to be back at Mozambique.
We've got exactly 2 minutes left, and I'm going to pose this question to all 4 of you and allow you to briefly give me a short answer. What does a fully functional, efficient transport and logistics system look like for South Africa? Gavin says the utopia of transport and logistics by 2030. Quickly, Bonnie, what does it look like for you?
I know we're out of time, but I just want to quickly acknowledge Ken's scale up inclusivity. We're doing quite a lot of work to bring in emerging miners. In Manganese alone, we recently introduced 6 new mines, and that is to that point. And the key outcome of everything that we are doing is ultimately South Africa moving more than 250 million tons of grain.
Ken?
Yeah, I think for me, I would just like to see this collaborative effort. I mean, we always talk about collaboration. I'd like to see this collaborative effort in this industry, together with road, with rail, with third-party logistics providers, and the likes of Transnet. Just a simple number of facts that we do. To move a Panamax vessel out of Port of Richards Bay on the North Corridor, if you truck, customers are trucking it all the way down. It takes about 1,600 odd trucks. That's 1,600 trips down and back up, versus 12 trains out of the Rustenburg area. So that's what we want to see. We want to see that collaboration, trucking it to a siding, and then putting it onto rail into the port.
Elaboration, James?
For me, it's doing more with less. For railways, it's one of the oldest industries in the world that's as relevant today as it was in the time that it was incepted, and it's about doing more with less. It's extremely high fixed cost business. Efficiency is everything. The Americans, how is this? The Americans from North America, the Americans and Canadians, from 1980, they have lifted 50% of their rail track, removed it, okay, and doubled volumes. More with less. It's efficiencies, it's technology, trains running closer together, trains turning around faster. That's how we do this.
And Gavin.
I've got exactly 0.00 to say something. I think it's all been said.
Yeah.
So all I'm going to say is repeat it. The most important thing is this. We need to understand there are certain cargoes that are better suited to rail, and they must run on rail. There has to be a symbiotic, close working relationship